In this video, we are going to talk about the top 10 Metaverse stocks in 2022. So before starting, please like this video and subscribe to this channel for future updates. Let's start. Number 10. Immersion Corporation. Immersion Corp's touch feedback technology, sometimes known as haptic technology, is gaining traction as a Metaverse stock. This Metaverse company's major purpose is to enable people to interact with anything in the digital world. In Metaverse technology, it is established to employ 5 senses. Number 9. Adobe Incorporated. Adobe Incorporated is a well-known Metaverse technology firm that is committed to investing in Metaverse technology in order to enjoy the advantages of the digital age. This Metaverse business is focused on collaborating with Metaverse in order to maximize growth. Adobe will broaden its product offerings to include new areas such as generating 3D objects and ensuring that new movies are legitimate in the Metaverse. Number 8. CrowdStrike Holdings. CrowdStrike Holdings is a well-known Metaverse stock for its cloud-based security software. It is appropriate for Metaverse's data security implementation in order for this Metaverse firm to manage the digital world. It provides endpoint security to safeguard an organization from possible data breaches, as well as zero-trust protection for Metaverse-related devices. Number 7. Microsoft. Microsoft, MSFT, seeks to use the Metaverse to gain a competitive advantage in the marketplace. By shifting virtual meetings from the video camera to the Metaverse, Microsoft Mesh for Teams aims to revolutionize the way virtual meetings are presently done. Utilizing this program, users may hold meetings, deliver presentations, do walkthroughs, and do many other collaborative activities using AR/VR technology. As the work-from-anywhere idea gains traction, this is more vital than ever. Even from a distance, companies must be able to sustain a strong business culture and collaborative team functions. Overall, Microsoft had a great year in 2021, and I think it will be the best stock on our list in 2022. Microsoft's sales increased by 18% in fiscal 2021, reaching $168 billion. Operating income climbed by 32% to $70 billion, thanks to tremendous and continuing margins, as indicated in the chart below. Microsoft is presently producing an operating margin and EBITDA margin of well over 40%, which indicates the power of the software as a service (SaaS) model and the company's great management. Microsoft stock is now trading 10% below its 52-week high with a forward PE of 33. Like Apple, the corporation prolifically buys back stock, which helps shareholders in the market and decreases the share count, as illustrated below. Microsoft also pays a very secure 62-cent quarterly dividend. For Microsoft, the Metaverse potential is merely frosting on the cake. The firm is burning on all cylinders moving into 2022, and this stock will continue to reward long-term investors handsomely for years to come. Microsoft, in my opinion, is the best bet for 2022, based on the whole package of improving margins, growth, cash flow, decreased risk, and capital return to shareholders. Number 6. Apple. Apple, AAPL, is another corporation that is turning to the Metaverse to improve on its already stellar performance. According to rumors, the corporation plans to release its AR/VR headgear in 2022, with a lighter, slimmer improvement following in 2024. Given the company's 1 billion iPhone users as its primary client base, the potential is enormous. The prospect of a new cash source to complement the iPhone, Mac, and iPad has investors drooling, and the company's worth has temporarily surpassed $3 trillion. Apple's performance for fiscal 2021 was excellent. Revenues climbed 33% to $365.8 billion, while operating income rose 64% to $108.9 billion. Similarly, diluted EPS increased by 71% to $5.61. Because of the company's aggressive share repurchase program, EPS grew faster than operating revenue. The corporation purchased back $85 billion in shares in fiscal 2021, which is about 3% of the current market value, as seen below. A 22-cent quarterly dividend is also paid by the corporation. The buybacks are beneficial since they reduce the number of outstanding shares of the firm, allowing EPS to rise quicker. They also serve as a tax-deferred capital return to shareholders. Number 5. Meta Platforms. Meta is so committed to the metaverse that it renamed itself Facebook earlier this year. Meta argues that the natural progression of social media is towards the metaverse. To that purpose, it has made available Oculus VR headsets, including the Rift and Quest lines, and plans to make them even more available in the future. The metaverse is the next step in the growth of social networking. Our company's mission is to assist in the creation of the metaverse, thus we're changing our name to reflect our dedication to this goal. In the metaverse, 3D places will allow you to interact, study, cooperate, and play in ways that we can't even envision. When a whistleblower testified before Congress in 2021, Meta was embroiled in scandal. The stock suffered a setback, but it still ended the year on a positive note. Despite the hullabaloo, Meta's sales and operating profitability were strong in 2021, exceeding those of 2020. Look for Meta to have a good Q4 on high advertising results. The company is trading at a forward PE of less than 24. Number 4. Matterport. Another intriguing metaverse experiment is Matterport. This business converts tangible assets into digital files. After then, digitalization might be utilized for design, operations, or other types of visualization. Among the sectors that profit is real estate, retail, hotel, and construction. The firm has 439,000 users and yearly sales of $111 million. The stock hit a peak of approximately $37 in late 2021, but is currently trading at a 58% discount to its previous high. The firm became public through SPAC merger in July of 2021, and prudence is necessary. Number 3. Nvidia. Nvidia is a picks and shovels play on the metaverse. Its chips will be utilized to power the resulting metaverse platforms. The business also used CES to announce the free availability of their Omniverse software, which serves as the plumbing for the creation of metaverses. Omniverse has been downloaded by over 70,000 different creators since the December introduction of the open beta. On the worldwide market, there are around 40 million 3D designers. At GTC, we saw our Omniverse vision come to life. We introduced new capabilities and dramatically enlarged its ecosystem. Omniverse Replicator is an engine for creating data to teach robots. Replicator augments real-world data with huge, diversified, and physically realistic synthetic datasets to expedite the creation of high-quality, high-performance AI across computational needs. The NVIDIA Omniverse Avatar platform connects several core NVIDIA SDKs, including speech AI, computer vision, natural language understanding, recommendation engines, and simulation, to create interactive AI avatars. NVIDIA is much more than a metaverse stock. The company is a highly profitable behemoth that had a fantastic year in 2021. It currently trades a little over 20% below its 52-week high. Revenue for fiscal Q3 came in at $7.1 billion, a whopping 50% above the same time in 2020. As indicated below, operating income was $2.7 billion. In recent years, revenue growth has risen dramatically, attracting the interest of investors. The company presently has a forward price-to-sales ratio of over 26, and a non-GAAP ahead price-to-earnings ratio of 65. Number 2. Unity Software. Unity Software is a platform that allows developers to create 2D and 3D content for a variety of platforms, including smartphones, PCs, and AR and VR systems. The beauty of Unity is that material developed with it can be utilized on a variety of platforms, and it has applications well beyond gaming. The stock of Unity skyrocketed in 2021, but it has since plummeted from its highs. It is presently trading at a discount of more than 40% to its 52-week high of $210. As can be seen in the graph below, there is a lot of downward pressure right now. Unity has a strong gross margin, which was 79% in Q2 2021 and 78% in Q3 2021, respectively. In addition, the company's revenue has been steadily increasing. After expanding by almost 48% year-over-year in Q2 2021, revenue increased by 43% in Q3 2021. Unity is presently trading at more than 30 times forecast sales, suggesting that, like Roblox, selling pressure may persist in the short term. Number 1. Roblox. Roblox was a significant story in 2020 and 2021. During the epidemic, both user and revenue growth soared. Roblox is a free online metaverse gaming platform that allows users to play and create games. The majority of the company's revenue comes from in-game Robux, which allows users to customize their experience. Roblox must demonstrate that it is more than just a pandemic stock by continuing to build its user base and translating this to profits. Its income has been constantly expanding, but this hasn't converted into operational profitability. The company's activities generate a lot of cash. In Q3 2021, there were also some promising results. The number of daily active users, DAUs, has risen to 47.3 million. When compared to the 19.1 million in Q4 2019, this is a massive figure. Q4 2019 was the final quarter prior to the pandemic in the US. The number of hours users were engaged grew by 28% year-over-year in Q3 YOY. What do you think about our video? Let us know in the comment box below. Please like this video and subscribe to this channel for our future updates. Thank you.